Good morning. 5/19/2011. It's Thursday. It's day 4 of the original 10-day reversal that we have. So that the bull rally pullback has been contracted. It's not nearly selling through areas yet. However, we do have this day upon us, which is Thursday and Friday of the expiration. Once the indexes do come up and test their resistance levels, we're going to be watching to see where that progressive selling would come back next week. One thing about bull rallies, long-term bull rallies, I didn't say bull market, but long-term bull rallies pull back. This particular pullback that started 3 weeks ago is not nearly the pullback that we have had in February. It's been very well range bound. Part of it has to do with the options expiration week. So where stocks were overbought and they've worked off their bull rally overbought process, they remain to be good stocks depending on the sectors that they're in, and that's for a different day. So just to let everyone know a little bit about the trade management today is, as we clear out of the options expiration, we have a lot of seasonality that we're going to be talking about. You know, tech is usually pretty dead in June and can be one of the weaker sectors. The commodity trade, those trades are going to be range bound as well. So this morning we got another retailer, PetSmart, up on earnings. Dollar Tree, once again, in this retail sector. The bull this morning, the TQQQ, is up $1.09. So we have that pre-market futures gap right now. This is how markets set up. However, selling into the top end is what we're going to look at. So when stocks make their intraday highs again, the pullback or contraction, the pullback from those highs, if they're not diminished pullbacks, meaning that you make the great move but you pull back and they hold up toward the higher end of the range, then that's when we can say that a bull bottom in individual names and indexes would be starting to set up again. And what those patterns look like, how to manage those patterns, and how to use trade management, risk management along with those. So basically, we have a contracting list, 1.00. You got the bull gap here, okay? But 1, 2, 3, 4, 5 names. This is not a name. It's a bull ETF. These two, that OPEN, which was overbought and had to come down, a lot of these stocks in the retail sector are getting their last little gap up. Traditionally, retail starts to fall soft during the summer period that we're going to be approaching. Those overbought areas will pull back, and then they have a tendency to pick up back to school and this kind of thing later in the year, in the calendar year. So we're going to define seasonality and trends. We're going to define where short sellers enter the market on certain kinds of names, where the hedge fund managers come in. When things start to break simple day, we call them simple moving averages. Like SINA, breaking the 50-day, sellers increase the 10-day limit orders out to sell into resistance. Bigger money, that's what they do. Bull and bear on this one is it hit 116 and dropped $5 off the high yesterday, just kind of like we said they would. Once the shorts got out up here above the 50-day moving average, the white line, that's where that trade took place. So just a little bit of mix-up in the Nasdaq open. Here we go. We've got SMT, KLAC 10 core, semiconductor stock, raw stores is on our overbought list. You talk about being overbought to no return. This is one. This is one. And it doesn't gap down very much. It had great earnings, good retailer, executed well. Besides all that, it's so overbought that we'll be looking at raw stores. One thing about this particular stock for trade management off the bottom, it will hit a bottom and it will bounce. KLAC 10 core, on the other hand, it's in more of a narrow range, and there's probably some news related to these things. The raw stores, I doubt there is any news, because there is no bad news on this name, other than the name is extremely overbought. So that when it does go up, when it comes off the low side of that trade and it does come back up into that price action resistance, you would have, you know, the narrower ranges, you know, you do a couple thousand shares up there and you get your 50-cent pullback. It's $1,000 trade. Volume entry management, it will bounce off of the bottom MMTs, okay? And for special trading courses, learning how to trade overbought stocks, learning how to sell short into resistance, all these kinds of things, which are fundamentally what the public model is about. So that's the gap up and the gap down and the trade management on the options expiration. Like I said, you don't have a lot of volatility because you only have 4 names gapping up above $1. That's pretty weak.